This is Alan Bush with ADMIS. In the stock index futures, we did see some new historical highs in the S&P and the Dow futures this morning. This as a direct result of the European Central Bank cutting deposit rates to a negative number. They took the deposit rate from 0 to a negative 10 basis points. So that accommodation from the ECB supported stock index futures globally. However, it now appears that we may be in for a bit of a consolidation period now that we do have this very bullish news out of the way. Ultimately, though, I think we will break out again to the upside. The long-term trend has not changed as far as we can see. The main trend is still higher for stock index futures. In the currency markets, some pressure developing in the euro currency. This after the ECB announcing more accommodation. It looks like a little more accommodation than many analysts were anticipating. And yet the euro now has recovered. Starting to think now that even though the euro currency has declined to a 4-month low against the dollar, this may be as low as it gets with this bearish news for the euro currency out of the way. Also, we did see the pound advancing as funds flowed away from the eurozone into other currencies, including the British pound. Longer term, still thinking the pound will be the best performer to the upside. Also, we did have a blow-off, or at least it appears to be a blow-off to the upside in the dollar index. A couple of layers of buy stops apparently were hit above a recent high. But now the dollar trading a little bit lower, so we're thinking that with this bearish news for the euro and the bullish news for the dollar, that some of the trends that we have seen will be reversed, including the recent uptick in the dollar index. So from here, I would look for lower in the dollar. Still looks like lower in the yen, as Japan's economy is likely to weaken. And interest rate markets, the front end of the curve did better than the back end with the news of the ECB cutting rates. However, longer term, we still think that the long end will be the best performer. Overall, though, the entire interest rate complex is likely to continue to advance. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.